Okay, guys, welcome. Good evening. Happy weekend. Let's wait for others to come in. Okay, guys, I'm going to send the link to the chat session now. So kindly help share so that your friend can come in. Help share the link so that your friends can come in. Because this night's class is a hot one. You are going to be gaining a lot. You are going to be learning a lot tonight. So guys, share the link. I hope you guys can hear me. If you can hear me, please let me know in the chat session if you can hear me. If you guys can hear me, let me know in the chat session, please. Oh, great. Nice. So let's just give it some time so more people. Please kindly mute your speakers, please. Kindly mute your speakers. Thank you. Tonight's class is going to be hot. Thank you. Kindly mute your speakers. Kindly mute your speakers if you can hear me. Thank you very much. So guys, please share the link. I just pasted the link. I'm going to do that one more time so that we can get more people to join. This night's class is going to be very, very great. And then you are going to learn a lot. You are going to learn a lot of secrets to be shared tonight. I hope you guys are ready for me. So please share the link so we can get started. Share the Zoom link to your friends because a lot of secrets will be revealed tonight and you don't even want to leave anybody out. Trust me on that. So share the link and then we'll get started. Okay. Just go to the chat session, copy the link and then share it to your friends. Tell them to join in. Okay, guys, you're about to get started. Share the link. Oh, great. I'm loving this. I hope everyone can hear me. If you can hear me, send me a chat in the comment section. If you can hear me, let me know in the comment section, please. Wow, I'm loving this. Great. So I would like to get straight to the point. So if you are a trader, whether a long-term trader or someone that is holding or something like that, there is going to be a time that you would have set a stop loss on your trades. Like normal for risk management, you would have set a stop loss for your trades. And then what happens is that I'm going to share my screen now, guys. I'm going to share my screen so that you can see. Oh, great. I'm going to share my screen now. So you can see my slides. So there's and you got kicked with stop loss. I'm trying to okay. Trying to set this up right now. I also think like wheels and market makers. Okay, yes, we are in sprint. Okay, great. So like markets, saying there's to be you set your stop loss, and then your stop loss was, and then the trade went out, like okay, let's say a coin now, and you set it to manage risk, and then the trade hits your stop loss, and then it went back up. Have you ever been in that shoes before? Let me know. Let me know in the chat section. Has it ever happened to you before? The plus was it, and then the market went back up, like it went as you planned. Has it ever happened to you? Oh, great. So, guys, this is what is actually happening. This is what is happening. I'm going to show you all those secrets this night. Okay. You can still continue to link, please, so that more people can join in. So what happened is, it is the work of the whales, the market makers. We're still talking about the same people. Although you don't have to get it wrong. They're not doing something bad. No. All they are just doing is that they are trying to make money, and then they don't want to lose more money while doing so. Money. Okay, great. So saying it's them really because they are doing what they can to make their money, to get their profit. And then what you need to do is that you need to learn how to think like them, and then you learn how to play like them, and then you learn how to trade like them, because that is what I'm going to be teaching you in this night's session. Okay, so now we have some basic terms that you need to understand so that you can get along very well. The first one is whales. When you hear me say whales, or when you hear people say whales, there's no you that you would have heard that term whales if you are trading the financial markets, be it stock, crypto, anything. But basically in cryptocurrency, we have whales. You guys get. So whales are a person. A whale can be a person or a group of persons that they bring funds together, a very huge funds, and their funds is used to enter the market so that they can make profits. And then when they enter the market, they make huge change in the price. Either shorting it, that means the price going down, or longing it, that means the price going up, either buying or selling. And then I've explained how a whale can buy your coin, and then it can even change your life forever. If a whale enters your coin and then it pumps 500%, that is them 5 times of whatever you have in that position before. So now institution traders, they're like let me say institutions. Do you guys get? They trade with institution money. It's not actually their money. It's very similar to whales also. But one thing you guys need to get out of this is that we are still talking about the same idea. They still trade with big money. Even with the market makers. Guys, please let me know if you are hearing me. Let me know if you are hearing me, please. Let me know if you are hearing me. Let me know in the chat session. Oh, nice. Cool.
Yeah.
Cool.
Yes, we can hear you.
Nice. So, as I was saying, the market makers are people accuse market makers that they manipulate the markets. That is it. Because big funds, they use for the state of the market, like they control the emotions of people in the markets with Ford News. So they say they do this because of the market makers so that they can buy in at a very, very low price. So although the thing is that when you search for market makers on Google, you are going to see something like exchanges that trade, buy and sell so that there can be liquidity, this and that. You guys get. But market maker also means someone that's like a group of body that they try and control the market in a way that is going to profit them. And then I've said earlier that they are not doing this thing. It's not a bad thing. It's not a bad thing. They are not doing it. They are not trying to be wicked. They are just trying to make money. You guys get. So you're also going to think like them so that you can make money like them. So now order flow. The thing is that when in a trade, there's always a buyer and seller. For every buy, there's always someone at the other end that is willing to sell. And for every sell, there's someone at the other end that is willing to buy. You guys get, we have exchanges like centralized exchanges and then decentralized exchanges. In all of these exchanges, people go there to buy and sell. That is it. That is it, basically. They go there to buy and sell. So the thing is that the order flow is the way they buy and sell. The principle behind it is that when someone buys, there's someone willing to sell. So now, one thing I want you guys to note also is that when someone is buying a huge portion, please mute your audio, please. I'm trying to do it. Okay, so as I was saying, when someone is buying a large order, for example, let's say a whale enters the market with about let's say $10 billion. Let's just put it, for example, a whale enters the market with about $10 billion. And as I said earlier, in order flow, when someone is buying, there's someone at the other end that is willing to sell. So that order of up to $10 billion, there might not be someone actually at the other end that's willing to buy up to that portion. So what the exchanges do is that they are going to break down this trade, a $10 billion trade. They might break it down to 10 places that they'll fill the order one by one. Like once I press buy $10 billion, they're going to fill it one by one. And then it affects me that I'm the whale or the institution trader or the market maker. Let me tell you how it affects me. Binance, I think they charge about 0.02 or so for their trading fees. Now, if you look at that amount that they charge, that those exchanges charge, not only Binance, other exchanges too, if you look at that amount, the thing is that I'm going to be in loss when I pay a transaction fee that's supposed to pay once, I pay it up to like 10 times or 20 times. So that is the basic reason why whales use techniques in order to buy and fill their orders. Do you guys get the point now? They use techniques in order to buy and fill their orders. That is basically what they are doing. They are not doing it. It's not a bad thing. If you're also working for an institution trader, I mean, if you're working for an institution, you're not going to lose out on your trade. You don't even want to lose out on the trade at all. So that is what they do. They try to manipulate you guys, the retail traders, so that their own orders can fill. That is why your own stop loss gets filled easily. The reason is that what happened is that is actually like a deviation. But before I get to that point, I will explain thinking. So thinking is basically like when you want to do something like a person, you have to think like that person. Look at what this person is doing. Observe this person. And that is basically what crypto-based media have done for you guys. We've observed it, we've researched, and then we are bringing it to you guys that, okay, if you want to make money, think like these people. If you want to make money like they do, you think like them. If not, you go against them. And one thing is that if you're a retail trader, you are trading with your small $10,000, $5,000, your money doesn't really move the market that way, like the bigger people, like the institution traders and then the whales. So if you say you are going against them or they are buying and they knew you are selling, I'm sorry, you are going to be in a very, very big loss because they trade with big funds. So you basically have to think like them for you to be able to profit like them. So now this is just a rare picture of a whale, something just like graphical, just to let you know that it's something big, something very, very big. They come in with big funds and then they make their profit also in large percentage also. So now how the whales play their game? This is what they do. The whales, they use deviation, something we call deviation. They use it to hunt your stop loss and then they kick you out of that position. That is why your stop loss gets hit and then the market goes back up. It is a deviation candle. Do you guys get? So you should know a deviation candle when you see one. They always have a long wick. If you guys know candlesticks very well, a candlestick consists of body, the wicks, the upper wick, lower wick, open, close. So that wick, that stick, that tiny, be it green or red, that's what we call wick. So now I'm going to show you a graphical illustration of what I'm talking about right here. So this is it. If you see that box, that a little bit white box, see that candle, that red and green candle, just look at that line. That is a support line. Just below that line, that is a deviation. Now, let me explain it. The market is meant to hit that support and bounce immediately, bounce up. But this is what the whales did. This is what the whales did to manipulate the market. They actually sold more. Like they filled in orders that is going to make it look like that market is going down. Like if you zoom out now, let me zoom out now, you will think this market is literally going down. If you didn't see the remaining green candles, you think it's actually going down. But in the real sense, it's not going down. It's the work of the wheels. They want you to think. They try and change your own thinking. Retail traders, they want to change your thinking that the market is going down. Oh no, I'm moving my money. Oh, my stop loss has hit. So the thing is that those stop loss that hit, those your orders that hit, there will be enough order for them to fill their own buy order. Now, the whales want to buy as this box. They want to buy at this support normally, but they need more money. Okay, the whales want to buy up to $10 million now. They want to buy up to $10 million, but there is no enough person that is willing to sell them that $10 million. So what do? They try and move that market, that candle down, so that they can get more people to sell them. Stop loss will hit. People that have lost hope will hit. People that say, oh no, it is over, I'm selling my stuff, they will hit, and then they will sell everything so that those institution traders, their own orders can get filled. It is just as simple as that. And what we are telling you here is that you have to think like them, so that you don't make these mistakes, so that you don't fall for a deviation trap when you see one. It's almost like a trap here, actually. That's what I see it as. So I'm still going to come back to this. I'm still going to reference this image. So now, moving on to the next thing. This is how they earn your stop loss. They trick you into thinking the market is going up, and then they short the markets. I mentioned this earlier. Okay, they will trick you that, okay, this market, let me go back here. Let's say they trick you that exactly this side, they will make you think that the market is going up. This purple line, they make you think that the market is going up, and then they short it. Because actually, if you see this long green candle, you think the market is good, the trend is strong, they are going to buy this and that. Unfortunately, the market is coming down. So it's very, very funny how these people operate. So now, they also trick you into thinking that the market is going down, and then they long it. That's it. They buy. When I say long, I mean buy. When I say sell, I mean short. When I say short, I mean sell. So this is it. Look at it here. They've bought it here, and then they're going to make their profits. So they actually make you think that this market is going down, and then they long it. That is basically how they get their orders filled. I hope you guys are learning. I hope you are learning. Okay, now they also make you have doubts in your trading strategy. Like, they'll make you think, this trade is not working. This trade is not working. I'm going to move out. This trade is not working. That's what they make you think with the way they operate. So, okay, how to think and play like them. You need to think and play like them. Now, if you want to think like someone, like, you actually have to study them. You have to understand them. I mentioned this earlier. You have to know how they do things. Then you can model their method. You can copy or replicate what they are doing in an even advanced way. That is just one principle of life. And that is exactly what you are doing here. We've studied them. We've understood them. We've seen what they are doing through the chat. You can see it. I just showed you guys too now. So that's what they are doing basically. If you want to become wealthy and financially free, you need to have a millionaire mindset. That's just a poor mindset, and then say you want to have money. I can bet my mindsets, all those money are going to finish. You even know, maybe 1 year or 2 years max. So you have to know how to get, because there's no bird to fly. So book for you guys. They say Lambo, you want to Lambo. Well, it has been long I've heard that word Lambo, maybe because of the current situation of the markets. But that aside, so every traders, if you are trading your investors, you really need to be reading books. They are going to help you. So now, without wasting our time, how to think and play like they do. This is it. This is just the technique. This is it. I want you guys to listen carefully here. This is it. You have to set your stop loss far away from where they can give you a long way. This is a long way right here. This one is not even they are going to be longer than this. So now, you want to set your stop loss, normally we hear what you've been told. If you've taken a course before, you hear that you should set your stop loss at support, take your profit at resistance, this and that. But the thing is that they know that those whales, they know that this is what majority thinks. They know that this is what majority thinks, and then they try to. Are you guys still with me? Please let me know in the chat section, please. Let me know in the chat section if you're still with me. If you're still with me, let me know if it's the chat. Let me know, please. Are you guys with me? Oh, great. I'm loving this. So now, I was saying, you've been told that you should buy at support, sell at resistance, or you should if you should set your stop loss at support. The thing is that these whales, they know that that's what you've been taught. They know that is the general thing. And then there's a saying that goes, if you want to get rich, you don't think like majority. You don't think like majority if you want to get rich. You don't think like majority. You make it sure that you are doing it right. You are doing it different and right. So that is it. That's what they do. They know that you are going to set your stop loss at this support. So they try and manipulate you. They will hit that stop loss. They will hunt it. They will hit it. And then they will move the markets back up so that their own orders can get filled. It is just as simple as that. So if you now want to escape that, you can set your stop loss below the wicks. Although you don't know the wicks yet, but you can still set it far away from the current support, but not too far. You can set it far away from the current support, just before that next support line. Because if this support line breaks normally, we're supposed to be looking at another downside in the next support line. That is how it works. That is how technical analysis works. So if the support line breaks, you're supposed to be expecting. But this is just like a fake breakdown of the support line. So this is actually fake. If you want to know an original one, you have to follow up with volume. If the volume is large, everything will be right. If the volume is large, yes. If the volume is large, everything will be right. Everything will be right if the volume is large. So that is it, guys. I'm still moving on. Okay, yes. So I said, once you see a long wick at a crucial support and resistance level, you know that the wheels are in play. Just like here, it is very, very easy. Look at the long wicks. You know that this is the work of the wheels. And sometimes you just have to be patient before you enter a trade. And then your entry also matters. When you want to escape things like this, it's better for you to enter at a low level than for you to enter. Because the thing is, if you set your entry well, you now have cause to be setting a stop loss very, very close. You guys get, if your entry is at the bottom, okay, imagine someone that entered at this deviation level or this basic support level now, someone that sets their entry there and then enters. The thing is that they get to set a good stop loss range and they aren't going to lose much money. Even if the market is later coming down, they aren't going to lose much money. That is just one thing about it. So now, okay, I've said once you see a long wick, okay, great. A whale, yes, this is also very important, guys. A whale will never FOMO on a coin. Like they will never buy at high price. That is what whales, they don't do that. It's only in special conditions or something, or exceptional conditions. Well, there's no rules that has no exception. So every rules have exceptions. But what I know is that whales, they don't buy FOMO. They prefer to give you guys FOD. For those that don't know the meaning of FOMO, FOMO means fear of missing out. It happens when a token is currently mooning, and then people are like, wow, it's pumping, let me buy it, and then unfortunately they get caught at the top. They are not making profit, instead they are making loss. That is what FOMO is. So when these people, when they set FOD, so that this thing, they do it so that they can buy. So you can buy more. That's why they set for this is that. China banned Bitcoin. This banned Bitcoin. This one is setting regulation. That one is setting regulation. All those things, they are just FODs. Like a popular saying in cryptocurrency world, they say you buy the FOD, you sell the FOMO. Buy the FOD. You buy it when there is fear, uncertainty, and doubt, and then you sell when people are getting fear of missing out. You know that you are going to make profit that way. So now, These people, they buy the dips. You see, sometimes Michael Saylor, I hope you guys know Michael Saylor is a very prominent person in this world. So him or any other institution, they buy billions of Bitcoin, and then you think that it is when they buy that they announce, and then you think that it is the buy that is actually moving it. Although normally their buy is going to move the price up, but what moves the price up mostly is the emotions of those traders. That is it. Emotions of retail traders, because when you hear that news, you feel, wow, someone is buying Bitcoin. They've just bought a lot. It's going to pump. People are going to start buying. They'll start buying. That's why we say we might need only, it's my only one or two news. Okay, if USA makes Bitcoin illegal tender today, I can assure you that within 2-3 months, you're going to be seeing $100,000 Bitcoin. That's it. That is the power of news. That's what news can do. That's the power of news. So these people, they actually buy, and then maybe some hours later or maybe some days later, they now come to social media and tell you those soldiers bought Bitcoin, this and that. So it's actually good to be updated, because if you're updated, you are going to be updated on things like this, and then you can set your trades well, because it's actually more about fundamental analysis. Although you have to know a technical analysis also, but it's actually more about fundamental analysis. So guys, I think we are moving. So now, closing remarks. All these things I've said now, you guys have to be careful. The reason why I think guys. So the reason why I said you guys, the reason why I said you guys to be careful is that you don't want to set your stop loss very, very far away so that you don't get burnt badly. Because what I've been saying is that you should set your stop loss away from the current support. I've been saying this, but still at the same time, you still have to preserve your capital and then manage your risk. So now, I want to share a secret with you on how you are going to do this. Is a very important secret, and you guys should listen attentively. So the thing is that we have a purple support line here. Okay, I'm zooming in now. We have a purple support line here. And then we have this gold. This gold was a former support line. It's a former support line. We'll see the support line at this point. So we have this purple support line, and then let's say you enter the trade exactly at this first yellow line. You enter the trade at this yellow line. Yes, this yellow line you're seeing on the screen. You enter the trade right there, and then you want to set your stop loss. I advise that you should set it away from the current support. Right now, you have to set it away from the current support. But there are sometimes that in your charts, away from the current support, it might be 30%. So if unfortunately the market goes down, you are going to be on 30%. So now there is a way that you can actually set your stop loss, and then you actually achieve not getting haunted, and at the same time you still maintain your position. So this is it. Let's say normally your risk, the risk you can stomach is like 5% risk. So you now set your risk 5% from your entry. Your entry is the good line. If you set your risk 5% from your entry, you set an invalidation point. That invalidation point is where I said you should set your stop loss to. You can set it before this current good line. So when you set your invalidation point is somewhere that your idea is no more valid. When you think, oh, the trade is wrong, I was wrong in that trade, because definitely when you are trading, you know that there's going to be loss. So you are going to set your stop loss 5% away from your entry, and then if the stop loss hits, you can still set it. You can still enter the trade again. You can still buy that same coin again before it gets to the invalidation point. Now, the invalidation point is between this gold line and then this purple line. So you can still set your buy again before it reaches the invalidation point. When you buy again, if you are going to set your stop loss 5% away again, so if your stop loss hit again, I think you should just leave the trade if your stop loss is the game, because that's about 10% loss, and then you might not be able to stomach up to that. But if you can stomach that risk, then no problem. But we won't even be saying all these things if your entry is very, very perfect. If your entry is perfect, those lines, they aren't supposed to be more than 10%. Those deviation, this circle is deviation. It's called a deviation. When you I'm done with this call, you guys should try and go through your chart and then see what I'm saying. Everything is in the charts. Just draw your lines and then you see everything in your charts. So guys, that would be all. I'm going to be handing over to Crypto Pastor to I'm going to be handing over to Crypto Pastor to continue this session. Okay. I'm going to be handling over right now. Okay, Crypto Pastor, you can proceed now.
Okay. If you can hear me, just say hi on the comment section. Hi. Okay. Okay, good. So hope you all are doing fine. I believe you guys have been richly blessed with a lot of knowledge tonight on how to think like the whales. Do you understand? You see, this crypto market, what they do here is what the whales do here, what market makers or the institution do is that they buy your fear. You know, when let me just give you some instances. When China, can you hear me clearly? You can hear me clearly, just say hi. Someone say you can hear me. On the comment section, can you hear me? Just say hi. Can you hear me clearly? Okay, good. Okay, someone said they can't hear me. Okay. So let's go back to business. When China banned crypto, people were panicking, blah 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 blah. You understand? And all institutions, market makers were happy. They were just spreading news, spreading fear, causing fear. China has banned Bitcoin. Bitcoin will fall. People were scared. People were selling off. As you were selling off, they were buying. As you were selling off, they were buying. They were buying your fear. Do you understand? So that's just a typical example of how they think or how they do their thing. You know, they said if you want to be a billionaire, okay, you do what the billionaires do. Do you understand? So at this point, I don't expect anyone to, to panic. You have to think like them. Do you understand? So some people here are still saying, crypto get to 20K, Bitcoin fall to 40K, 15K, 2K. I've seen a lot of memes online. People saying crypto will still go to 20K to go to 10K and all. No, it doesn't work that way. You're not the owner of the market. What you do as a trader is that, okay, you react to what the market gives you. Don't filter the noise. Don't listen to what people are saying. Don't listen to what the fake news are spreading on the internet and all. You only react to what you see on the market. So be like, crypto will fall to $20 very soon. The next thing you're selling loss. The market is still reading $40K, $30K, $30K. All because somebody just told you that crypto is going to go to 20 goes with selling loss. It doesn't work that way. It does not. The institutions buy your fear. They buy your fear. Institutions, they buy your fear. You understand? I saw Rock was talking about the weeks and all. When they liquidate you, Yes, it happens like that in the market, okay? But the thing is, it depends on your entry, okay? And again, he said you shouldn't put your stop loss, okay, directly on the support line. Because what these institutions do, they want to deceive you in making you to, let's say, making you to sell or put that panic or that fear in you. The market is going down, okay? So I have to just, let me set my stop loss. So it's good to always think. As a trader, you have to have a working strategy, first of all, because if you have a strategy that works for you, I don't think we are afraid of whatever happens in the market because you have a strategy that works. There's some traders here, people here, they have some bad habits in trading, and this bad habit in trading will kill them. Today they use this strategy, tomorrow they use this strategy, they extend their stop losses, they take profits too fast. They make use of revenge trading. What do you call revenge trading? They make, maybe it hits that stop loss now. Before you go into any trade, or before I even go into any trade, I'll be like, okay, this is the amount I wish to lose on this trade. No matter what the market makers or institution does or whatever happens, I have chosen the amount I wish to lose. If I lose that money, I will never go back into that market. I will calm down, take my time and look for to me, I don't think there's a perfect entry, okay? But just take, as a trader, you think in probabilities, okay? Take the best trades. There's nothing like perfect. There's nothing like perfect in this institution. Anyway, I tell you this, there's nothing like a perfect, the word perfect in this institution. We traders think in probabilities. Do you understand? There's nothing like perfect. So whatever strategy I'm using that's working for me, if it fails for that particular trade, fine and good, it failed. But the goal is my wins over my losses. Bigger wins, smaller losses. Some people, once they, God, I've lost about $100. I know this coin, I must get back my money. You just angrily, stupidly go back into the trade without any strategy, without even checking, okay, is this at least is the entry at my advantage? Then you get burnt times 2. You understand? Do you get my point? So that we call revenge trading. Some people will extend that. You see the market, they are fixed their stop loss to where they feel initially that, okay, fine, it gets here, I'm out. You get? They get here, I'm out. But once, because of greed, or how would I even put it, they say, no, I've used this money. I think I still stand a chance. They extend that stop loss. You don't do that. It's bad. These are what the market makers institutions do they will just short long, because you know that they're working on your mentality too. Let us short this market. This will forgive you, short this market, and definitely they'll play out like this. You understand? They know what they are doing. So, but your strategy is what will save you. Some people that issues about trading. I heard someone saying, if I put $10 on like 20 coins and long them, 5 will be successful. Don't trade that way. You don't trade that way. In fact, I'm telling you, this is how the market will reverse. Even the 10 trades will go the other way around instantly. I've been seeing some screenshot of someone when the market just goes down like with some 2 or 3%, when they just the week just come outside, like you see some people that trades minus 300%, minus 400%. So who does that? How many trades? You don't over trade. You understand? Then what I mean by filtering the noise, you always hear news. You always hear today Feds are talking. Today SEC are talking. Today this country is this IMF, or just different news that can shake the market. Do you understand? So just your own duty as trader is you have taken your trade. You have your strategy that's working for you. Then just do, and again, trade what you see. Don't assume in future, in the next 5 days, it's nothing like that. Except you're an investor, you can think in the long term. Okay, I'll buy this coin, I'm holding this coin called the project.
You are too fast.
Over a period of time, because of okay, I'm holding this coin, I'll hold this coin over a period of time. I'll see let me see, based on the very, very good spread with a good strong fundamental you get. So you don't just take trading tips from unknown people. Your friend just come, hello, Alpha, this coin is going down. Would you sell your coin? This is not next out of fear. You sell your coin. You don't take trading tips. You have to. That's one reason why I shout always join a community. You just always try to join a community. That's just the best for you. You can't just take advice from just anybody. You don't do that in trading. You don't do that. You don't just go to the internet and say, man, it's on the news, this coin is liable to go down, blah, blah, blah. You don't do that at all. Then wait for the part. Some people, what is killing them is lack of patience in this space. Lack of patience. You have to wait for the perfect trade. Like I said, there's no perfect, but we have to think in okay, over 100%, at least this setup is 80%. What I've seen before, I think, you understand? You have to think in probabilities. Okay, it can go the other way around and it might go up. Just think in probabilities. You understand? I know the kind of coins you trade. Imagine somebody coming to my DM and telling me, sir, I want you to give me a pump and dump coin. What's the meaning of that? You want me to give you, you want me to send to your village faster? Sir, did you have a pump and dump group? Do you have a pump and dump group? I'll be like, okay. So you don't even, you don't even know how it works. You don't even knowledge. You just go and tell me, do you have a, I get messages like that like almost every day. Sir, do you have a pump and dump group? Sir, which coin is best to buy? Sir, how do I buy this coin? You don't do. Okay, I tell you the coin. I tell you to buy a coin now. You went ahead and bought the coin at the top. You didn't wait for an entry, a good entry to buy the coin. You don't even have to just go and buy and that's a coin. And the market goes the other way around. He come by there and tell me, sir, the coin told me to buy the other day, this and that, blah, 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 is going down on. So, first, as a trader, I advise you, if you're new into crypto and you hear my voice today, I advise you to join a community and learn, and just learn first. See how other people are doing it successfully. See, the market makers will work on your mentality, as in, they'll work on your mentality in a way that you will lose. When they shut the market, you think the market is going down. You automatically, they know, yes, people are, the market is going down. They long it immediately. This is you not even having a strategy or something that can even save you. They long the market immediately. The market is going up. They know how to work. See, this market maker know how to work on people's psychology. They study these things. As a trader, no, they said trading, as a trader, you have to study what? Human behavior. They work on human behavior. Look at, let me even call Oga Elon Musk. During the time of Dogecoin, you get, Elon Musk will just tweet, but once he tweet like this, you guys will be like, Elon Musk has tweeted, FOMO everywhere, this coin pump. Then the coin pumps, Elon Musk dumps, and he's happy. You get the point now. He tweets again, you rush, coin pumps, he dumps on you guys, he's happy. So you don't do things that way. You see, these are people that, like Elon Musk, you can call him a whale. Yes, and no, yes, he has huge sum of money in this market. So they know what they are doing. They know exactly what they are doing. There's how you short the market, and they just buy and longs back up again. So that's how the market makers work. They buy your fear. They make you scared, they spread news and be like, sell off, this and that, you get. So if you have a working strategy, yes, market makers study your psychology. So you have a working strategy, I'm telling you, you are going to be very, very successful in this market. If you have a winning trade, accept your win and just live peacefully. If you have a losing trade, accept your loss and live peacefully. Then re-strategize again. Because you're in losing trade and you keep losing, very soon you're going to have the mother of all losses. You get? And we are in a market of uncertainty. You understand? So you just focus. Just what? Focus on your strategy. Don't focus on making back your losses. Focus on trading well. Accept small losses, but protect yourself from the big ones. Consistency is what will make you who you are in this market. Keep exposing yourself to the market. The profits will take care of itself, I promise you. This market is a market of opportunities. Just accept small losses, then protect yourself from big ones. Keep on trading. Keep exposing yourself to the market. But my one key is that always know you have to preserve your capital as you expose yourself to the market. And consistently, profit will take care of itself. And like he said you guys have to read books. But if you read books and you're not taking action, only reading books will not give you the kind of confidence you're looking for. You need to take action, you need to test, you need to back test, you need to trade, you need to take risk, make mistakes, learn, grow, and achieve your goals. Practice. I'm betting you practice will always beat theory. Not by really taking a course without take a course, fine. Take action. Develop yourself too. Self-development is very important in this space. Self-development. That's how you're going to succeed in this space. Do you understand? So that's just it. That is just it. And always remember that in this space, patience is a financial. Some people are just, see, People, to me, 80% of traders failed because of lack of patience. Mark my word, I said it. 80% of traders today failed because of lack of patience. They fail to understand that patience is a financial asset. Patience in this market is a financial asset. Do you understand? So let me tell you one of my pattern of trading. I want to go back to that week, the weeks of when the market maker and the wheels, what they do. I set my stop loss below my support line. Most times I set my stop loss below. I like giving myself space. That's my strategy. I don't know about you. I like giving a gap below the support line. So in case of those kind of weeks, I can still get the chance to go back up. You get the point? Okay, at least 5% on my stop loss. You understand? And if it goes further than that, I'm no longer interested in that market. I have been kicked out and I accept my loss, accept my fate in peace. So, but I want to let you know that you still have 10,000 trades over the next decades. You will still have more and more trade to trade. Don't, because of one trade, you want to kill yourself to get your money back. I'm telling you, you still have 10,000 trades over the next decade. You understand? So don't feel bad. Don't feel bad. Don't get upset because you lost the last one. Reset, focus, and move to the next trade. Do you understand? So, to me, I noticed the main reason why traders fail is because, number one, they lack risk management, no trading plan, and they give up when they just, I cannot continue, I've lost a lot, blah, blah, blah. If you have a proper risk management, you follow your discipline, you follow your strategy, why will you lose the amount you're saying you lose? I lose what I want to lose. The market cannot tell me what, the market cannot decide my loss. Yes, it can only go the way and make me, yes, I'm in loss, but I chose what I want to lose. And I'm happy. If I lose, I'm happy. If I win, I'm happy. Either ways, one of my strategies worked out. My loss strategy worked. My win strategy worked. Any of them is good for me. Do you understand? So that's just it. I'm wondering when some people will cry, oh, the market, even on my spot, I have my stop loss on my spot trading, not only futures. So when the market goes down, some people will cry, like, why are you crying? Initially, your trading spot, you didn't say, at least, okay, anything can happen in the market. Just set your stop loss like below to a certain, just look at the support and resistance, or just to a certain level so that pleases you. Okay, if the market goes around and lose, you should just sell off so I can get a chance to buy back at a cheaper prices. Some people trade without stop loss. They trade against the trend. The average losers. They are trading without even good knowledge of how the market works. Just which coin will I buy? They don't follow their lose. They don't have a trading journal. They don't have a trading journal. They don't even have a mentor. They are not in any community. They don't even keep track of their profit. Only loss. Check the account, loss. You understand? So I don't want to deviate from the topic, but it's still part of the topic, but I don't want to deviate. So these are what institutions today here, like a seller bought some amount of Bitcoin. He bought some amount of Bitcoin doesn't mean that it's time to buy. I'll post a news on my status. I'm like, oh, Mike Kessler bought some amount of Bitcoin. He bought where it is suitable for him to buy. You understand? Some retail tell me, some people, sir, is it time to buy? Sir, were you blind before he bought, when he bought his own? When Bitcoin giving you cheaper prices to buy, is when you heard that Michael Saylor buy, you want to buy. Now, maybe as he bought at 32, he bought and the coin has pumped to maybe $34. What happened? I didn't buy at 32 when he bought. Tell me it's a good time to buy. So I think you just have to learn and think like a trader. Do what the billionaires do to make money. They buy your fear. You to buy the fear. Always focus on the current. Forget that in 10 years ago this thing happened. 5 years. Kindly mute yourself, please. Kindly mute yourself, please. I don't. So Good. So I think you guys are getting me. Elon Musk posted, but Dogecoin, the pump, you went to go and FOMO. FOMO means fear of missing out. You don't trade that. Why did you buy when it was still very cheap? And you have gotten a good setup. You have seen a good chance to buy. Buy and wait. At least you have done your analysis. Let the market play out. You have set your stop loss. What are you scared of? See, the market makers now come and do their thing. They will now be, see, my coin is this one, speaking different languages and heading straight to your village. I cannot save you always in your village. What if your people are stronger than me? So that's just it. So the one thing this space is, to me, is getting the proper knowledge. Once you're in the proper, you're going to get the proper knowledge, you're in the right community. I'm telling you, I bet you, trading is very interesting. See, and some people fail to understand that losses are part of the game. Some people fail to that they think they have this Ponzi scheme mentality. But if I enter today, next month I'm going to be able. It doesn't work that way. I'm telling you, and the premium tiers, it doesn't work that way. Losses are part of the game. See, I've been losing money since the 80s. You understand? But I didn't give up. And thank God for life. I'm enjoying the fruit of my labor. Do you understand? See, let me tell you, initially, when you start trading, when you're making losses, people will call you crazy for learning how to trade. People will tell you trading is too risky. People will laugh at you. But everything just goes silent when you triple their annual salary in a month. Bet me. I said they will call you, this guy, you're trading, you're losing money because it's going down. This guy doesn't know what he's doing, he's losing money. People, they will laugh at you. But the very day, the very month you earn their annual salary in just 1 month, I'm telling you, they'll come at me to, please, Alpha, show me the way how to do it. Trading is not a 6-month game. It's not a 6-month game. Or you have to focus. It's something of years. You might not get the very best from it just now, but over a period of time. If you can go to school for 4 years, why can't you trade? Steady 4 years, and let's see how it goes. Mark my word, to not be a billionaire and all those people that are going to school. I'm not saying school is not good. You get? I started trading now. I was a teacher when I started trading. Most of you already know my story. I was teaching secondary school, mathematics and culture and creative arts. Strong mathematics teacher with culture and creative arts. Then that time, games master. Then when I started trading, I was earning 14,000 salary years ago. Till my friend introduced me to trading and all. I started learning how to trade. From there, I started putting in the work. My salary, part of it, I bought. That time, Nigerian currency has small value. I'll buy small coin. Though I was just blowing my money, and I was looking at this with this Ponzi scheme mentality. After I got burned severally, nobody told me to calm down and remove that Ponzi scheme mentality and focus. Before, I thought that in trading you can't even lose money, and the worst trading addiction is thinking you can't lose. Who are you? There's no trader in this market that doesn't lose money. I lose money also, so let nobody deceive you that join this one is a lie. There's no the worst trading addiction is you thinking you cannot lose. Once you think you cannot lose, I'm telling you, you earn the premium tiers. Losing is part of the game. Take it or believe it. Forget luck when you are thinking about money, and also forget luck when you are thinking about trading. Don't just say, let me just try, I'll be lucky. Forget luck in this. There's nothing like I'll be lucky in this trading. Not like I'll be lucky. If you do say I'll be lucky, you end up in premium. Just instead think in probabilities. Take perfect setups. Take perfect setups. Yes, suitable setups. You get the point. Setup that will protect your trading account every day. You understand? Setup that will protect your trading account every day. You don't even have to trade every day. That's just it. So, if you're a newbie here, I just want to give you an advice. If you're a newbie here, I want to give you an advice. Number one advice I'll give to you is to fight this market. I didn't say you should fight the market makers or the whales, but to be successful under the market makers, and because he has explained everything, Rock has explained everything, how the market makers and whales work. So, as a newbie, to be successful under this condition, find a strategy. change strategy, go back to your original strategy. Just keep on backtesting till repeat until you get the best trade that works for you. Stop going around in cycles. Find a process and stick to it. If you find a strategy, it doesn't work, you change it. If it works, try it again. If it works, still try it again. You understand? And stick to it. I'm telling you. So, for this 2022, I want to tell you guys something. For this 2022, I want to tell you all something. Number one, that is something that will guide your trading or your investment this 2022. What I'll tell you now. Number one, focus. The one you all should what? Focus. Number two, no FOMO. No FOMO. No what? FOMO. Number three, be patient. Number four, keep it simple. Number five, stay humble. Number six, stay disciplined. Number seven, use the position, position yourself, position size, put your position size in the right order. Trade liquid market. Low prices can go lower. High prices can go higher. Let your signals guide you. And also don't forget to always keep cash. For what? In reserve. So I can always have some cash to buy back. You don't have to pour all your money in one coin. Always have cash in reserve to buy back. Always know that as a trader, you are going to fail, and fail. And you're still going to win. So that's what I just want. So that's it for today. Crypto Pastor has spoken. And I think you all have understood clearly how the market boss, will you go to Dubai? You all have understood how the market makers and the whales work, how they try to work on how we think, how they buy our fear, how they buy our greed, how they make us sell. Do you understand? So I believe this is enough to guide you in your trading journey. You understand? So it's not a journey of one day. Like I always say, greed is the most dangerous trading poison. Greed is the most dangerous trading poison. So, and also work on your mindset. Trading is all about probability. I always say this thing. Trading is all about probability. If you can stick to only high probability trades, there's a better chance of you becoming ahead in a long run. Each moment is unique. There is no right or wrong. It's just, see, in trading, there's nothing like right or wrong. It's just probability. So a setup that you think that will never work might be a setup that will work for you. So that's just it. And work on your emotions. I know emotions are the hardest things to control, but once you can do this, the impossible become possible. Do you understand? So that's just it for today. That's what I have to just tell you. So you all should have a great night. I believe you have been richly blessed. And once again, I'll still tell you guys, if you know you are not in any community, our Love World community is open for you guys. Our Love World community is open for you guys to join. The fee still remains the same, 130K. It's a community whereby you meet experienced traders that will teach you, that will guide you, that will show you how to be successful and profitable in this crypto space. We have videos, we have courses that you can take and study and ask questions on how to be successful in the crypto space. So I'm going to be handing over the mic back to Rock, so that Rock can just wish us well.
Okay.
Yeah. So if you're interested in learning, come to my DM. You have my number, you have my WhatsApp line. Can join our community. We'll teach you, we'll put you through, and we'll show you how to become successful on this space. So the price still remains 130K. That's the trading fee to learn on that Love World crypto community. And that's just it. So thanks for having me today. We'll still meet same time, Saturday again, with more interesting topics, and God bless you. So I'm having over the mic to Rock now.
Okay, thank you very much, Crypto Pastor. Thank you very much. Thank you very much. Wow, that was a great session. We really learned a lot. We learned a lot. We learned a lot. Thank you very much for that. So, guys, I don't know if you have a question. If you have any question, please send your questions so we can answer them. Time is gone already. So please, if you have any question, please ask them in the chat session. Just ask them in the chat session ASAP so we can just round up. I think we don't have any questions to answer. But okay, guys, for those that came in late, the recording is going to be sent to our YouTube channel later. We are going to upload it on our YouTube channel later this week. So you guys should subscribe. I've shared the link earlier. You guys should subscribe and then you turn on the bell icon so that I can get notification on when we upload this video and then other videos. So you can get when we upload this video and other videos. So okay, I think in the absence of in the absence of any question, I think we can end the call now. So if you learned a lot, you should share Crypto-Based Media. Crypto Pastor is going to be posting our link. Share it to your friends. You need to tell your friends about Crypto-Based Media because we're actually doing a lot for you guys. Like, you guys are going to enjoy 24/7 updates about the crypto markets, confirm analysis that you won't even see anywhere. And then on our YouTube channel too, we have a lot of content still boiling, still coming. But we have some videos there already. But guys, trust me when I say we have content. We have content coming for you guys. A lot on Crypto-Based Media. So guys, thank you for coming. Make sure that you share to your friends next time so that you don't drink from the pot of knowledge alone. So thank you guys. Thank you. That will be the end of this meeting.